Who was on Squawk yesterday, Mike, and your anger was evident. I'm just wondering how your emotions and your thoughts about this have evolved now that we have this filing today.
Yeah, listen, macro guys don't stay angry long. We try to be rational. And so this is bad for the system, like, period, right? The whole system's built on trust. All finance is built on trust. And we had a trusted counterparty for lots of people that turned out to be something that, wasn't advertised. Yesterday I mentioned it felt like Elizabeth Holmes or Theranos, and it very much does feel like that for, employees of his own organization to investors to counterparties. And so while it's in some ways the economic impact is less than Three Arrows, Celsius, BlockFi, that first wave, in that wave, unfortunately for the small guy, most of those losses were retail depositors, and lots of them losing $10,000, $4,000, $50,000, $200,000. But it was tons of losses spread out amongst lots of people. FTX was the institutional liquidity provider. And so big institutions, we lost 4% of our equity. And so we can certainly survive that. We've got $1 billion of cash and $1.5 billion of liquidity. It pisses me off, but it's not going to knock us out of the game. But I have other counterparties that have lost 30% or 40%. And, institutions run with leverage. Institutions run with high cost rates. And so I think in some ways this is a lot worse to the infrastructure that was being built up for people to buy, sell, lend, and promote coins. And so it will be a setback. It doesn't end crypto by any stretch, in the same way I said yesterday web-ban didn't end the internet. Bitcoin, Ethereum have big, diverse communities. There are a ton of people working on cool projects. There is capital that wants to come into the space. And usually, these events, when there's blood on the streets, is somewhere close to buying opportunities. And so is it today? Is it in a month? Is it in 2 months? There will be a buying opportunity in Bitcoin, Ethereum, and in building this new, economic infrastructure.
Yeah, that's kind of the theme that JP Morgan goes with today. Collapse of FTX might prove to be the catalyst that moves the utility value of crypto 2 steps forward. They point out all of the recent collapses have come from centralized players and not from decentralized protocols. You think that makes sense, or is that Pollyanna given the uncertainties of the moment?
I've been talking about that for a while. I think we're gonna go into 2 different buckets. You're gonna have centralized places that live under regulatory regimes. I mean, we're regulated. I'm a Canadian-listed company. I came out instantly and said we have $77 million. There's no lack of transparency. This is our cash position. This is our earnings. And so our counterparties that we're trying to build trust with can look at audited financials and realize that if I lie, I'm going to jail. The unregulated, centralized, businesses, and we've seen a lot of them, got up to a lot of shenanigans. On-chain is completely, the DeFi on-chain protocols are completely transparent. The beauty of it is completely transparent. What has stopped its explosive growth has been when you're trading on those exchanges, you're not positive who your counterparty is. And so if you take KYC and AML seriously, there's a reticence to use it. I need to trust who I'm using it with.
Right.
And so there are a lot of new technologies. We invested in Sealand that are working on taking on-chain analytics and making that possible.
Mike?
And I would bet in the next couple of years, you're going to see DeFi really take off.